speed is the name of the game in trading. The mismatch between what blockchain people think is high performance and what people coming from trading firms think are high performance are just so far.
We have to sort of engage in a bit of a Aristotelian definition of terms.
Frank's TV is like at least 5.5 feet up the wall. It's way too high.
Ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chaparro, and joining us on the other side of the mic is not a stranger to the program, but it is his first time appearing in his new seat as the co-founder of DoubleZero, Austin Federa. Thanks so much for taking the time during your travels, in the midst of your travels, to take a moment to walk the audience through what you've been working on so diligently these past few quarters.
Hi, Frank. Thanks for having me. Appreciate it.
Of course.
For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
So I guess for the unbaptized, right? And I would even maybe include myself among in that category, given that we haven't talked too much about the project. You know, we're always too busy joking about the height of my television and our own respective travels around the world and airplane configurations, just the sort of nerdy stuff that we often go back and forth on in the DMs. But walk us through, we'll just dive right into it. What's the core thesis behind the DoubleZero project, and just what, lean into sort of this gap, right? This gap in internet infrastructure that you're hoping to solve. Obviously, I think, and forgive me, audience, if you don't know Austin's background. I mean, he kind of has been through he's been in the trenches, as it were, building out Solana and launched DoubleZero last year. But anyway, with that all being said, let's get into that core thesis.
Yeah. So, to start out with, Frank's TV is like at least 5.5 feet up the wall. It's way too high. So someone needs to make an intervention in New Jersey.
I sent him a
Um,
picture of me watching it, and the POV is like this. I have all these neck problems.
um, yeah, DoubleZero is basically an attempt to rebuild the internet infrastructure for high performance distributed systems. And we do this by using physical fiber cables. It's kind of the unsexiest project in crypto because what we're talking about is physical fiber infrastructure in the ground. People in like crypto like to talk about like, oh, we're building like infrastructure, and there's a lot of awesome software infrastructure that's been built. But this is like a physically interconnected network of fiber where we have multiple contributors all around the world. And the goal of the project really is to take the best of private networking technology, which is several decades more advanced than the technology that you get on the public internet today. And it's been used for decades by high frequency trading firms and, the cloud providers and all of kind of the big tech companies you think of today to enable their systems to run high performance and run distributed around the world. We don't think of like Google as like a distributed systems company because at the end of the day, there is one company that holds all of the keys, for lack of a better term, to Google. But they have, many points of presence all over the world to make sure that when you send a Google request in New York or Buenos Aires or anywhere in the world, you get a response back really quickly. And in order to build those type of systems, you really need private dedicated fiber. The problem with private dedicated fiber historically is it always had to be run by one centralized company. If you were jump trading, you would run your private network. And if you were Citadel, you'd run your other private network. And if you're Google, you run a private network. And none of these systems can talk to one another. And additionally, they're all intentionally built so only one company can access them. So at DoubleZero, kind of like the breakthrough was we figured out a way that you can have multiple independent networks run by multiple independent contributors appear and interoperate as one seamless network. The exact same way that the public internet does today. Of I don't have to worry about like, are you on Verizon and I'm on AT&T? The networks just talk to one another. But it's based on a fundamentally new generation of technology that enables the types of throughput and performance that is just impossible on the public internet today.
So, is it safe to say for folks maybe building in crypto that the problem you're solving for is we can sort of at the software layer make blockchains run super fast, super efficiently, but there's still this reliance on the undergirding infrastructure that is maybe not in all aspects super high performative.
Yeah, it's your classic like you've got a Ferrari, but it's stuck in traffic, right?
Yeah.
The software clients that exist today across a number of networks are quite fast. And really, kind of the vision for DoubleZero came out of the work that I was doing on the FireDancer project back at Solana Foundation, which was a net new validator client for the Solana blockchain. And that client can do a million, 2 million transactions per second in testing environments. And when we say testing environments, like there's always a question about like, well, is that just simple transfers? And basically what you see is when you run like real world benchmarks on FireDancer, it is orders of magnitude faster than the Solana network is today. And the reason for that is the public internet. Um, the internet was never built for high performance distributed systems. It was built for one to one communication anywhere in the world. And it's really good at that, right? I'm sitting here in Seoul and you're in the United States and we're recording on Riverside and everything's working pretty great. There's a few hiccups every once in a while, but this is fundamentally like a fairly low performance, low bandwidth application. If you try and say, okay, now we want 10,000 people all over the world to be able to watch this broadcast. Well, that's actually a quite hard problem. And kind of the best way to explain this is why did it take like 15 years for us to figure out how to stream the Super Bowl? Like, you shouldn't think this would be such a hard problem, but every time there's a really big major sporting event, most people go to cable or they go to DirecTV or they go to some form of like legacy broadcast because the internet streaming services have historically been pretty bad at these types of things. Because the internet was never built for one to many communication, it was built for one to one communication. Is if you think about it, like if I'm a validator building a block, and I'm building that block, let's say here in Korea, and there's 3,000 nodes out there between RPCs and consensus validators, I have to one by one send that data out to 3,000 different computers all around the world. And there's sort of fancy ways that networks get around this. Solana uses something called Turbine, where I send to 200 and they send to 200 more and they send to 200 more. Monad uses something called Raptorcast for this, which effectively works the same way. But in all of these situations, there's a lot of work that has to be done by the network to basically propagate data out. And on top of that, it's a slow, arduous manual process. And so, if we can use the technologies that are available in private networking, like multicast, where you just send a packet once and the hardware, the switches automatically get that data to all the places it needs to go to, we can push the bounds of what's possible in these high performance systems. So, at Breakpoint last year, if you saw, there's a demo of a FireDancer client running a million transactions per second on a bunch of nodes on 4 different continents. And we didn't say so at the time because we hadn't launched the project yet, but that was running on the DoubleZero network. And that was a real world example of how you can have high performance communication across multiple continents. And this gets into kind of like a dynamic we've seen in blockchain, which is the faster a network gets, the fewer validators it has. If you look at kind of a ratio of the transactions per second to the number of validators, Solana is the only fast network that is over 1,000 validators at the moment that operates in a single global state. You look at Sui and Aptos, and they're very high performant chains, but they're running, 200 validators, something along those lines. You get down to Hyperliquid, you're talking about 11, pretty much all run in the same country. And it's also a very permissioned validator system. And so one way to think of what we're doing at DoubleZero is we're removing the connectivity layer as a bottleneck. Suddenly you can have high performance distributed systems that have 2,000, 3,000 nodes and are also able to run at a million transactions per second because they're not using the internet to communicate anymore. They're using DoubleZero.
So to explain or walk through how you're doing that, I think there's we have to sort of engage in a bit of a Aristotelian definition of terms, of which there are many to unpack. There's the concept here of underutilized fiber, of dark fiber, excess subsea cables, and a lot of different terms with which I'm sure a lot of listeners are not familiar. So maybe juxtapose um, the landscape in which you're operating in with, uh, the project itself. I think most people grok that, right? Like, the world's connected by all these things that, go underground, and
Yeah.
you can use satellites to sort of hop over them and all sorts of stuff, but how does it all work?
Yeah. So 99.99% of the world's internet traffic moves through fiber. It doesn't move through satellites or microwave towers or anything like that. Fiber is still the gold standard in terms of capacity, reliability, and cost. There's nothing today that competes with it even remotely. And so, to most people's houses, they don't have fiber, but it's kind of that last mile connection where you maybe switch to some other type of technology. For the most part, everything else runs on fiber. And so you can sort of think about this as like there are public peering networks, which are the internet. And the internet today is largely run by 20 companies that, and this goes back to like historically how the internet was built out, but you had this idea of a tier one internet service provider all the way down to a tier three. And a tier three was maybe like your local company that like provided you a dial-up connection and maybe only serviced like half of your state or one city
Mm,
or a small region in New England or something along those lines. And then you get up to your tier one providers, and that was something like a Verizon or an NTT in Japan. These were these big, big companies that would actually go out and build the connectivity and the initially copper and then eventually fiber that connected like Japan to like China and South Korea
yeah,
and the cables that run under the ocean and connect it to the United States. And so we get into this kind of like history of this system that's kind of built on like Russian nesting dolls of internet connectivity, and every time you transfer a border from one company to another, you're basically dealing with a different system of prioritization. And the way that the business models work nowadays is every internet service provider is basically incentivized to get your data off of their network as quickly as possible. You would think that like right now, my data going from Seoul to your data going to the New York area, it would sort of be paying a bunch of little fees along the way. But that's not actually how it works. We didn't have the technology to build anything like that back in like the 80s or 90s. And so all of the internet service providers kind of have this crazy reconciliation model where they all sort of are like, oh, I sent you this much data, you sent me this much data, and we bill each other for the difference. And that's kind of like this net metering system of billing, and it doesn't incentivize good traffic routing and it doesn't incentivize good performance. It incentivizes you trying to maintain like a very sort of like 2025 view of trade balance, like view of the world is like, I want to be sending you about as much bandwidth as you send me. And so you'll get these like companies that are in fights with one another. And just like you might lose access to like a sports team in a market because the sports team is fighting with like your cable provider or something like that. You have all these like changes that happen constantly on the internet. So you have a very inconsistent speed of connectivity. So like if I'm in Seoul and we just do a ping test between my computer and your computer, and we run it for 24 hours, you'll see a huge amount of variance in how much time it actually takes my data to get to you and your data to get to me because the routing changes constantly. For text messages and YouTube and even, podcast recordings, that's pretty much fine, but that's absolutely not acceptable for high performance systems, let alone high performance financial systems, where data arriving out of order basically slows the entire system down. Or if I'm trying to make a trade and I know where the market's going to be in 75 milliseconds, but I don't know where it's going to be in 100 milliseconds. And there's a 50% chance that if I send my data, it's going to take 120 milliseconds to get to you. I'm not going to make that trade. So it makes the indeterminate on the physical networking layer makes markets less efficient. And this is part of why the traditional financial space is all dedicated private network links. It is faster, right? And so they get this sort of high frequency trading advantage, but it also has significantly higher predictability. It's like imagine if you were like trying to fly like from, one side of the world to the other and you had three flights you had to take to get there. But each flight was like, we'll arrive sometime in a 2 hour period. We're not going to tell you exactly when. We'll take off whenever we feel like it. We'll arrive whenever we feel like it. Well, suddenly, if you only have three hops, you now have 6 hours of variance you have to build in. So each of your transfer times has to be 5 hours to account for that potential variance. And it would just make air travel unrealistic. And now in the internet, you're dealing with sometimes 30 or 40 hops to get from, Asia to the United States. And each one of those hops, there's delay involved and there's a lack of predictability. And so like we have these like great graphs where you sort of see the amount of time it takes to talk from like LA to Singapore over the public internet versus over DoubleZero. And for DoubleZero, it's just one consistent line of time. It always takes the same amount of time. The public internet, it'll jump up to 250 milliseconds. It'll jump back down. It'll go as high as sometimes over a second. And you can see the graph like, oh, they're routing over this cable. And then they started
Mm,
routing over this cable. And then they routed over this cable. And then they routed over this cable. And so the whole system, like I know we're getting very deep into like network topology,
yeah.
but like these systems, they're very hard to predict how it will actually work. And they're very inconsistent performance.
No, that makes sense. And so when you think about the crypto trading experience, if we were to break it down for someone who is swapping or moving coins or staking or just participating in the crypto economy, having a more performative, predictable sort of base infrastructure for the internet, what does that mean for sort of the day-to-day activities in which they're participating?
Yeah, so most like retail users, like you and me using blockchain, the type of like time savings that DoubleZero provides doesn't matter to them when they're executing a trade, right? You're going through Phantom or MetaMask or something, and at that point, like you have a lot of delay in that system anyway, just from how those pieces of software are built. So the
Mhm,
benefit that you would see as a user from, let's say, like Solana or Sui or Aptos or an L2 adopting DoubleZero is not necessarily in your direct experience. It's in the aggregate performance of the blockchain. So what you might see is like, oh, Solana goes from about 5,000 transactions per second to 50,000 transactions per second. Well, what do you care if you're only sending, 100 transactions a day as a retail user? Well, suddenly you see much tighter margins on DeFi. You see much lower slippage. You see the market becoming much more efficient. You see the average fee you have to pay for a transaction being much lower because there's more capacity. And you basically just see all of these markets working more efficiently. Traditional financial markets are extremely efficient. They have very little spread compared to crypto. And that's not just because there's more volume going through them, that's because there's much less risk for market makers, right? Crypto has this weird thing where, like, market makers have to spend a lot of time actively worrying about getting picked off. And it's not because they're bad at predicting where the state is or something along those lines. It's because if you're dealing with a traditional financial exchange, like let's just say like I'm a trading firm based in Chicago and I'm trying to trade on the New York Stock Exchange, right? I always know my server is trying to run data from Chicago to New York. That's a point to point system. I always know how long it's going to take because I have dedicated bandwidth. And I always know that if I get it there in X amount of time, it'll be processed in Y amount of time. But that's not the case in blockchain, right? I could be a market maker and I say, oh, I gotta get a cancel order in because the price has moved. Where am I sending that? And like physically, where in the world am I sending that? Well, maybe the leader is being built right now in New York, right? Maybe it's being built in Amsterdam. Maybe it's being built in Sydney or Perth. And suddenly, if I have to send a transaction, right, from an RPC server to get into the blockchain to find wherever the leader in the world is, it might be going 25 milliseconds because the leader is being built in
Or to be
Chicago.
going all over the world, on the other side of the
Exactly.
world, rather.
Right. And so all of that lack of determinism makes it very hard for market makers and DeFi to sort of provide the most efficient price discovery it can with the lowest tolerances.
Mm. So does it really just boil down to the fact that our crypto markets don't have sort of the same determinism of the location of where these trades are being matched? We don't know, for instance, if I'm, you know, trying to move money on chain, that's getting routed or it's getting sent out to Secaucus, or what's the other place where they have them at? I think it's Secaucus and uh Carlstadt, New Jersey.
Yeah. Yeah. So there's kind of two components that go into this. One are blockchains are not deterministic in terms of transaction inclusion. Can't do anything about that, right? Like if I'm a block builder,
Yeah.
I'm a dictator, I get to pick exactly what goes in the block. There's some networks that are trying to do some stuff to address that, but we can get into why I don't think that's going to necessarily work. But the connectivity layer is also a really big one. And so if you think about it, like what has to happen when a block is created before a price on chain is updated. And updated is like kind of a hard term, but let's say my validator builds a block and you are trying to trade based on new data that's come in. So that block first has to get out to all of the other validators in the ecosystem so they can vote on it and accept it. Now let's just assume for a minute like that almost every block is confirmed because that is what happens in blockchain today. So it's a security check, but like you can kind of optimistically keep going. That data has to get from my layer to the RPC server. The RPC server has to process it, then be able to give you data, and then you can trade against that data. And so even if you are running a single sequencer like Base or any type of other L2, and the data is all produced in one location, it needs to get out to the entire RPC network before anyone knows about it, right? It's the classic thing of like, just because an event happened in New York doesn't mean that Singapore knows about it yet. We have to actually move that data from New York to Singapore for people in Singapore to learn about it to be able to trade, right? Or do any other action that they're going to take. And so even in a centralized sequencer, DoubleZero offers a much faster path of propagation than you get on a traditional internet infrastructure system. And you see this all the time in exchanges, right? The New York Stock Exchange offers a high speed priority fee that you pay millions of dollars a year to get access to, let alone the fact they let you run servers kind of bolted onto their systems. Um, but speed is the name of the game in trading, right? In the traditional financial markets, if I give you two options, you can be the smartest firm or the fastest firm. Everyone out there will pick fastest firm because you can be smart and lose money. It's very hard to be fast and to be the fastest and lose money. You're not going to have like crazy bets and crazy asymmetric upside, but you're going to consistently be making more profit than anyone else in the system because you're faster. And even if you're only taking 10 basis points every, trade over someone else, the laws of compounding mean it's an incredible advantage over everyone else in the system. And so this is kind of a long way of saying we're kind of trying to bring a lot of those mechanics to crypto and blockchain. And we think it will be a real advantage to users because we'll have more capacity on these networks. We'll have multiple networks running at 1 million transactions per second, both across layer ones and layer twos. And we'll also have much more efficient markets. And it will be a much better experience for traders without having to centralize the markets, right? Almost every other approach today to make crypto more like TradFi, whatever that means, involves centralization, massive centralization, far fewer validators, pre-confirmations, all of this type of technology that really kind of compromises, I would say, the point of crypto. And so with DoubleZero, the whole thing is like we need thousands of validators all over the world. And we need you to be able to trade against a local server, but we also need these markets to be much more efficient. They can't move as slowly as Bitcoin and expect, this technology to be adopted around the world.
You're making me think of the movie Margin Call, right? Where the
Yeah.
CEO says, I didn't get here. You can either win by being fast, smart, or cheat. And I don't cheat. Um, What do you think is the realistic time frame for rebuilding decentralized internet using or repurposing infrastructure? Is this a 3-year journey or a multi-decade long journey?
I mean, the thing about all software and hardware projects is they're never done, right? And so there will never be quote unquote enough bandwidth on double zero. There will always be additional marginal cost uses for it. But that being said, we actually have a test net up and running at the moment, and we'll be in mainnet before the end of the year. And this is largely in part due to a network of contributors that are incredibly excited about this technology. So we have 6 independent network contributors at the moment. That includes everything from firms like Jump Crypto and Galaxy down to VCs that have expertise in building out fiber networks from, past experience or something like that. And they're willing to take a bet that this is going to be a technology that'll be well adopted in blockchain. And so we're starting out with supporting the Solana network because it has the largest validator set to performance ratio. And so it's the hardest network for us to basically support. Um, but we'll be expanding to other blockchains from there and even non-blockchain systems because the same data throughput problems apply in the AI space. They apply to storage networks like Filecoin and Arweave and new generations of storage networks coming up as well. And so there's actually a ton of demand for this type of thing outside of crypto because if you're the size of Microsoft, you can just build your own data centers and run fiber between them. But if you're not the size of Microsoft and you want to be training AI in multiple different data centers all around the world, the public internet's not fast enough to move that data around. It's actually a limiting factor in yes, you need GPUs, but once you get the GPUs, they need to be able to talk to each other and share a lot of data back and forth. And this is why, like, do you know Amazon Snowball? Have you heard of this
Hmm.
thing?
Yeah.
Yeah, so this is like Amazon will basically send you a semi truck full of hard drives that you basically back up to your data center and you plug a bunch of cables into it and you transfer the data locally from your servers onto the semi truck. Then the semi truck drives to the Amazon data center, plugs in, and it sucks all the data back out. And that is actually the fastest way to get data into the public cloud because the internet is not fast enough today, which is like crazy that like we're basically moving data the way we would move like oil or like coal or something like that because the public internet infrastructure isn't fast enough to support these types of things.
So, if you were to think about the internet, or rather, how do you see the internet evolving if projects like this succeed? Are we heading towards a more localized, sovereign, crowd owned network framework?
Yeah, I mean, so we're not looking to replace the internet. I think this is kind of like an important thing about the project for like all general uses. The internet is incredible. We're huge fans of it. Um,
Big internet
but
guy.
it, yeah, big internet guy, huge on the internet. But it is not designed for the things we're using it for today in distributed system technology. And the big companies work around it, right? They run their own fiber cables. Meta is one of the largest investors of fiber because they want to sell people ads. Like it's crazy to think about it, but Facebook came in and wired up the Philippines with fiber internet access because they want to sell people ads. Like all of these tech businesses that we think of as software businesses, they get to a point where they say, man, we really need hardware if we're going to actually scale. Like our TAM is limited by the capacity of the public internet. And I
Sure.
think blockchain is at that point as well, where our scalability, our performance, our TAM, for lack of a better term, is very much limited by how fast these servers and these validators can talk to one another. But you fast forward, maybe 5 or 10 years, and like if double zero is successful, like what does this new internet infrastructure look like? Well, first off, we're not routing based on IP addresses anymore. We're routing based on public key and private key encryption. And so when I'm talking to the block, right, I'm not like trusting a DNS server to say, oh, this is the block, and the DNS probably is not hacked. There's a handshake, a cryptographic handshake that is verifiable without relying on a centralized authority that says, yep, this is the thing I'm trying to talk to. And maybe for a news site that's like not that valuable, but it's
Hmm.
really valuable for Coinbase or PayPal or, Uniswap or Jupiter, right? The fact that we can have a high degree of confidence that these systems are not compromised because we have cryptographic assurances. The other thing that I think would surprise people is there's actually no prioritization layer on the internet today. That if I'm like Fortnite and I want to make sure that like the kids can always game really fast, I can't just go out and say, "Look, I'm Epic Games. We make billions of dollars a year in Fortnite. I want to subsidize everyone's Fortnite internet traffic to always make sure that like it's a good experience, even if you're playing in an area with poor internet connectivity." You can't do that today. It's not possible to just go out and pay the internet, for lack of a better term, to prioritize Fortnite data. Sometimes they make very specific deals with specific internet service providers. But DoubleZero, our aim is to create a prioritization layer for any type of high performance traffic and give them an alternative pathway to go through. And so if you're a creator and you're trying to build a network that competes with YouTube and isn't owned by Google, you can actually go out and build a CDN network on top of DoubleZero. Because right now, like you're kind of trapped, right? If you're
Yeah.
building an alternative to YouTube, you're still probably building it on big cloud tech infrastructure. And so your margins are you're caught in this sort of like you're buying your picks and shovels from the same people who you're selling the gold to. Like we've basically created a company town model on the internet today where it's very hard to actually compete with the incumbents because they offer pretty good service. Um, and so if we're successful, like there are far more alternatives to build and operate internet companies on than the 3 to 4 major cloud providers of today.
So let's walk through maybe the technical playbook. How does Double Zero identify and thereby access underused fibers or cables? Are you knocking on the door of the municipality dealing directly with carriers or data center operators? What does that look like?
So today we are not dealing with carriers directly, simply because carriers are old school 6 to 7% cash margin businesses, and a lot of them are owned by PE firms, and they just don't understand tokens yet. And also, we're not in mainnet, so we can't show them like, here's about how much money you would make if you join DoubleZero today. So we're primarily going through the existing customers of those groups. So if you're someone like a Jump Trading or a TerraSwitch is a very popular bare metal provider in the blockchain space. They have leased a bunch of fiber already. But when you're leasing fiber, you don't get many choices, right? It's sort of like your home internet connection. You can get a gigabit, you can get 10 gigabits, you can get 100 gigabits, but maybe you only need 40 gigabits. Well, your option is just you have to buy a 100. And so what DoubleZero lets you do is contribute, only 10 gigabits, let's say, of that 100 gigabit line, or 100 gigabits of a 400 gigabit line to DoubleZero. Um, and that in that way, you can sort of think about it as like an alternative monetization channel for unused capacity in your systems. We hope, in the future that people are getting fiber just to contribute to DoubleZero because, the economics are there to support it. And I think we'll get there without kind of, a question at some point. But that's kind of the way that system works today. And so your question about like where do we need to get the fiber? Well, the easy answer is you just query the blockchains. Yeah,
Oh,
you just
sure.
query the blockchains, right? And you say, okay, well, blockchains are public databases. Where are all the IP addresses of all the stake out there? And you
Sure,
can
sure,
match
sure.
IP addresses to data centers, and you can kind of figure out like a map of the world from block. So there's, as it might surprise no one, there's a whole bunch of stake in Europe between Amsterdam, Frankfurt, and London. There's a whole bunch of stake in Tokyo. There's a whole bunch of stake in Singapore. There's some in Hong Kong. You have these kind of clusters around the world of where a lot of people are already running validators. Where they're not running validators, largely speaking, are Latin America, Africa, like Southeast Asia, getting into Australia, because the internet in the Middle East, because the internet infrastructure there is not particularly good. And so there's two things that we're doing. The first is we're bringing fiber connectivity to where there already is stake. And the second one is we're bringing fiber connectivity to areas people would like to run validators in, but they currently can't because the internet infrastructure is too slow. So Latitude is one of our partners in like network connectivity, and they're bringing fiber connectivity down to South America and Sao Paulo. And that's going to make it possible for the first time to really profitably run Solana validators in South America without dealing with a basically an economic penalty for doing that. Most people who are running validators away from the core, this applies to Monad, this applies to Sui, this applies to Aptos, this applies to Solana. They're doing it because they have some other reason. They either really want to run validators in their country due to national pride, or they're a government, or there's some other reason other than just pure economics that's allowing them to locate there. And so we're going to basically expand the footprint of where it's possible to run validators in the world. And this is really important if you think that like an L2 is going to have multiple sequencers or move the sequencer around, or on Solana you're going to have multiple concurrent block producers, right? Um, you need a fast global connectivity layer so the data can move back and forth quickly. But also, you don't want someone who is trading in South America to be disadvantaged against someone trading in New York. These are global distributed systems. And so you should be able to get parity access pretty much anywhere in the world that you're running the systems.
Thinking about the token, do you reckon that introducing a token into this kind of infrastructure project risks financializing it too early? You think about like some of the early
Yeah.
internet people, they were all kind of, weirdos in their mom's basement tinkering, um,
Yeah. I mean, I think we're
rather
past the
than
point.
profit seekers.
Yeah, yeah, yeah. I mean, we haven't had an internet like that since at least the mid 90s, right? And so I think,
Make the internet great again.
yeah, it's sort of like you go back to like defense contractors in the Cold War, and like they built the U-2 spy plane for like less than $30 million in like 9 months. I might have some of the numbers there, but it was incredible like how cheap they did that. And then you look at like modern projects, and it's like, well, these are run as like very aggressive for-profit businesses at the moment, and the internet's gone through kind of the same type of transformation. And so, for one, like, I don't think we can. One of the superpowers of crypto, going back to the original Bitcoin, um, is it weaponizes capitalism.
It's very ironic, Austin's cutting out for me. That's the definition of irony. Is this why we need layer 0 or double zero? Jesus.
Maybe we're back. Yeah, where'd
Oh,
you guys
yeah,
leave?
so
Where'd you guys lose
well
me?
well, where we left off was basically, this isn't your grandfather's internet.
Yeah, yeah. Okay, so yeah, I think we were talking about like some of the principles of this thing. So like, yeah, the internet. Uh, there's too much of crypto nowadays has sort of like shifted from weaponizing greed, right? Like the power of Bitcoin was like it weaponized greed and capitalism to produce optimal results. Everyone trying to screw each other over actually produces correct blocks. And if we use things like fee markets, we actually get like good, efficient like inclusion and discovery in this stuff. And too much of crypto started moving to almost like goodwill projects or things that rely on donations. And so we want to bring like hardcore economic incentives back to some of these systems, and especially on the connectivity layer. I think if we're able to actually do this successfully with DoubleZero, we start to build systems where providers are no longer incentivized for getting data off their networks as quickly as possible. They're incentivized for providing the fastest connectivity possible. And part of this is like there's a component of DoubleZero we haven't talked about yet, which is not going to be live at mainnet. It's rolling out in 2026, but prioritize data. Where if we have 5 different private fiber pathways you could take from, let's say, like New York to Singapore, all of those are going to be completely fast enough for blockchain consensus and voting. But if you are running an arbitrage or you're a market maker and you always want to make sure you're going over the fastest connection, you're going to be able to pay for prioritized data to make sure it's always moving over the fastest connection possible. And that is going to be a huge driver of performance on these networks. And it also aligns the economic upside of the network providers with the value they're providing to customers, which you'd think is part of the public internet architecture today, but it's absolutely not part of the public internet architecture today.
Let's maybe wrap up with sort of like thinking about just building this out. Obviously, you had storied Um, does storied carry a negative
I
connotation?
think it
Yeah,
does, doesn't
it
it?
does, doesn't it? Yeah, no, that's not the right word. I mean, you've built teams, you've built, you built out Solana. What is it like sort of now being in that co-founder seat and just from a talent and competition standpoint, trying to find the best low latency infrastructure engineers? Obviously, you're competing with from a talent perspective with you're not competing from a work perspective with some of these other chains, but from a talent perspective, how do you plan to attract and retain the type of caliber of talent that um, you're not just optimizing for block time here. You're
Right.
trying to build or rethink physical infrastructure. So where are these people?
Yeah, so a lot of our engineers on the Malbec Labs side of things are actually fairly new to blockchain. They're hardcore network engineers that have spent the majority of their career sometimes working at centralized exchanges, and sometimes working at high frequency trading firms, or sometimes working at other really latency sensitive internet businesses. And so one of the interesting things is like networking infrastructure is like what makes HFT firms work at the end of the day. Like everyone's like, oh, it's the quants, and like obviously the quants are important, but if you don't have the underlying network, the quant strategies can't run and can't work. But typically these network engineers are not compensated like the quant trading people, right? And so we're actually not like for us, the network engineers are the most important component of our product. For many of the firms we're hiring people from, they're not seen as the most important component. And so we're actually like our talent pool is incredibly skilled and there's a little bit less competition for them than you might expect there to be. Because for most industries, the connectivity layer is sort of like it's a you need it, but that it's not considered to be like the make or break in whether you're going to have a profitable trading strategy, even though it's probably should be. And so that means that like we actually can offer other things that these big firms like Citadel and Jump can't offer, which is the ability to publish your code, right? All of these firms are deeply secretive because they have special sauce and proprietary systems. We're building open source technology, right? DoubleZero is an open source blockchain protocol and an open source networking protocol. And so there's a lot of people that just they want to talk about the work they're doing. They want to not feel like they're working for the CIA. And so there's a really compelling answer to say, like, come build high performance distributed systems, talk about the work you're doing, publish papers, like help this industry move forward by a decade or more. And so we've actually had a really good experience on the hiring process for these high performance network engineers. Um, and then on the crypto side, like there's not a lot of projects that say you're going to work at a very low level on like very low level optimization and you're going to work on it across multiple projects. And so it's a very interesting like academic intellectual problem to say like okay, like I got to figure out like how does Solana consensus work and where are the areas we can work with the Anza team to bring these networking technologies to the validator client and make it faster. And then you get to do the same thing with Near and you get to do the same thing with like IPFS and like you get to do the same thing with like Mert and Helios and the RPC teams to figure out like where are the optimizations here. And like in some ways, it's like we're bringing like a F-35 to like a medieval siege. Like the mismatch between like what blockchain people think is high performance and what like people coming from trading firms think are high performance are just so far that like we're able to just add a ton of value. Like it's a lot of low hanging fruit. This is like the we've done so much work on like ZK optimization and like yeah, the software stack on validators and blockchains now is pretty well optimized, right? It's like pretty impressive what you can do over the public internet with a network like Solana or Aptos or Sui or Monad or Mega ETH. But the networking side has just been so neglected that it's kind of greenfield, right? It's like when Jump Crypto came and built the Fire Dancer client for Solana, there's just a bunch of stuff that they brought, like they brought a perspective that didn't exist in blockchain today. We always reinvent the wheel in crypto, and sometimes that's awesome. But like we don't have to reinvent the wheel when it comes to like high performance networking. We just have to build it in a way that has cryptographic assurances, that has multiple independent contributors, and is basically like sufficiently crypto economically and cryptographically enforced to be a trustable layer for this stuff to operate on.
And we'll leave it there.
Thanks, Frank.
Any open roles? Any podcasters that you need?
We're actually hiring for a bunch of roles. If you go to DoubleZero.xyz, there's a little careers tab in the bottom, and hey, there's a create your own role, and influencer, who knows?
Thanks for taking the time.
Thanks, Frank.
We'll see you soon. Be well.
You too. Move your TV.
Mm-hmm.